Good morning, everyone. Welcome to our webinar, Understanding Property Managers Insurance. My name is Zane Agostini. I'm CEO of CID Insurance Programs, and myself and Dan Mulligan, our professional lines underwriter, which probably a lot of you already know, will be teaching our webinar today. I want to introduce Jacob Cole, who's our marketing specialist. He's our behind-the-scenes guy that makes sure that everything runs smoothly for you. If you have any problems, he's the one who's going to be helping you. So let's talk about some logistics. So many of you know the routine because you come watch our webinars on a regular basis, but everyone will be muted. Because obviously there's too many people. We can't have everybody talking at once. So you'll be able to hear, but you won't be able to speak. But your voice is very important to us. So we really want to hear questions from you, but we just need you to pose them in the chat room any time throughout the webinar, and we'll stop and we'll answer those questions as we go. And we'll ask one more time at the end for any questions. But however, we prefer them throughout so that we can answer them as we go. There'll be a short survey afterwards. We really want your feedback as well. So if you would let us know how we're doing and if you have any suggestions, that would be greatly appreciated. So I think it's time to get started. What are our objectives here? So we want to understand the business opportunity with property managers. It's not that complicated, but I think it's worth taking the time to learn a little bit more about property management. What are their exposures? And then how do you connect the dots to claims? What are the claims? Because insuring, obviously, properly, you really need to know what kind of claims they're going to be facing so that you understand the type of management they're doing and what potential claims are going to come up. And then, how to best market to this business, to this type of business as well would be important. So we'll talk a little bit about all of that as we go. So let's get started. What is the opportunity with property management? Well, this is a 2017 labor statistics that showed 317,300 property, real estate, community association management companies in the United States. However, it's 2019, so within the this has been a growing market. I can remember when it was down in the 200s, and it just keeps growing. So. And that's probably because there's lots of investment going on, a lot of people that are spending money on property as an investment, and so you're obviously going to have a management company that needs to be addressing this. And a lot of the building is requiring management because you've got a lot of community associations out there. So what are the types that we're talking about here? We're talking about apartments, we're talking about condominium associations, homeowners associations, sometimes called PUDs, vacation properties, mobile home parks. And then I don't even know whether we even addressed it but you've got, all kinds of commercial property, you've got industrial property, you've got self-storage properties. These all require management companies. And then there's all that new range of business park associations as well, where they're building like community associations. So this is where we'll help you break this apart, because each of these types of the properties they manage can be create its own exposure. So the last thing I want to say here is that point of sale is a huge thing with property managers, because once you write the business's insurance, then you go in and you're now their expert, and you go in and you actually do a review of all the properties that they insure or they manage, and then you become the expert to insure all of that property. So that is, I think, one of the most appealing things about of managing, using property managers and point of sale. Okay, so let's get into the nitty-gritty of this. Understanding property management. Well, property managers utilize a management contract to memorialize the terms of the services to be provided. That is an important aspect for everyone to understand, because that's how you become a quick expert with property managers. That is typically, the majority of them understand that, and the majority of them include an indemnification clause that contains hold harmless language designed to protect the property management company. So I don't want to get too over everyone's head, but an insurance policy is an indemnification. It brings you back to where you were, no more, no less, prior to the loss. So if the management company is sued along with the property, then they're looking to be insured and be covered and indemnified by the insured's property, the property owner. So how do you pay for that? That's the third bullet here, which is you typically include that management agreement is typically going to include additional insured requirements for the owner's liability insurance. So it's good. You're going to be named additional insured on the general liability, and if you're managing condominium associations, you're going to be included on the D&O, the directors and officers liability, as well. So just those are risk transfer techniques that because a property manager can't afford to cover every lawsuit that they're named on, but they're not maybe solely negligent. So let's consider the types of properties managed to clearly see the property manager's liability exposure. Well, I've just mentioned a few of those, which is, it's going to be general liability with a lot of types of properties like apartments, single-family homes are going to be your key coverage, where the lawsuits will be bodily injury or property damage. And then like with condominium associations, you're going to be looking at bodily injury, property damage, and then now you have to be looking at naming the management company on the D&O. That's an important risk transfer for you insuring that property management company. Okay. So, property managers are exposed to the litigation caused by their sole negligence. So there's two ways here. The property manager can make an error, and if they make that error, it's their sole negligence, and you can't be indemnified for sole negligence. But if they're named along with the property owner in a lawsuit, then that's what that indemnification is designed, that clause in the management agreement is designed to protect them from, is being named on every one of the property owners' lawsuits. It's not affordable, and so that's how the manager protects themselves, by making sure that they have that indemnification clause available. The exposures are different, as I mentioned, so I think that's probably a slight duplication. I don't think I need to go into that. But what types of claims do we typically see in this industry? Well, anything that happens on the premise, is potentially going to produce a bodily injury allegation, and so that is one of the things. And Dan's going to talk about that, whether you want off-premise coverage for the property manager, or whether you want a premises-only policy. That will come into play, and he will go into more detail on that.
Hey, how's it going? I'm Dan Mulligan, the underwriter for professional liability here at CID Insurance there. And what I wanted to first discuss with you is property management companies' coverages there. So there's going to be a wide variety of different policies that a property management company has needs based on their size and the type of management they're doing. Obviously, the most important one right now is going to be errors and omissions there. Your E&O is where the lion's share of the liability is going to be held for a property manager there. And I'll go into that a little bit more. Then you also have, depending on the type of management, tenant discrimination, employment practices liability, directors and officers liability for the management company themselves. The new emerging coverage that is really important now is cyber liability, and we'll go into that a little bit later on. Your general liability, obviously property coverage for their office and other items there. And then since they're holding other people's monies, we're going to go into fidelity and of course workers' comp there. So.
Okay.
So now, I'm sorry. Go ahead.
The errors and omissions. Let's start there.
Okay. So.
Okay.
Sorry.
Go ahead there.
Errors and omissions, your professional liability there. A professional is the property manager is a professional, so they're held to a higher standard of care there. They have a special skill, a knowledge, training, judgment, expertise there. Professional services is, the property management is what's being performed by the insured, usually for a fee. There. So the property manager is really overseeing the operation of the owner or the association, depending on the type of management he's doing. So anything that's going to cause a financial loss to the owner of the property is definitely something that the property managers can be liable for. So that's one of the main reasons why you need your E&O. And then we'll go into some of those exposures.
Okay, so as far as the errors and omissions liability, let's go a little bit further into that. The client is retaining the expertise of the professional, right? They're actually, and this is a contractual agreement that when you hire someone a professional who's going to offer professional services, and it's an economic type loss, so the client can suffer a financial loss. However, it's not bodily injury or property damage. That's excluded on an E&O policy. So you would be looking to your general liability, which is one of the reasons that the indemnification clause becomes so important. So, and if the client feels that there's been a financial loss that could have been avoided, they will allege negligence on the part of the professional.
Okay, so for E&O, here are some of the exposures that a property manager has. I have a diminished value. Basically, you are managing my property and then the person goes to sell the property, and because it didn't have the proper upkeep and things of that nature, the owner feels, oh, my property's worth $500,000, but I only sold it for $400,000 because you let the property get out of line there. It wasn't, maintained properly and so forth. So I'm going to sue you for that $100,000 that I lost when I sold my property. I see a lot of those claims there: wrongful eviction, failure to maintain, which goes with the diminished value, administrative and financial errors. Homeowners association, management company pays a duplicate trash bill for a company. We've had a claim like this over a 5-year period of time. The trash pickup never picked up the trash, but was still billing, and they were paying for it. 5 years of time, $150 multiplied by 5 years, lost interest. That can build up to a hefty lawsuit there. Regulatory compliances, you didn't follow the Davis-Sterling Act. There's just so many compliances that a property manager has to do. We've had a huge claim for libel and slander. There's someone saying things about it, putting in writing also about their competition, things of that nature. That's going to be on the personal and advertising injury sides, which is on some of your E&O policies there. Real estate sales activity, a lot of property managers will also dabble into selling some of the properties that they're managing when their person wants to sell their property. And then another exposure they have is for what's called personally owned property. That's when the property manager is managing the property that they currently own. A couple of different exposures with that, but it's one of those things that when we're looking at the policy, we want to address to make sure there's proper coverage for it, because not all policies will provide coverage for that. Okay, so tenant discrimination. One of the exposures here, we have a couple ways that property managers can address this, and on the same nature, apartment owners too. Some errors and omissions have the tenant discrimination built in, or you can get a standalone policy there. Tenant discrimination claims are on the rise. These claims are more severe than claims of negligence or mismanagement. Cost for these types of claims average about $100,000. HUD, the State Commission of Human Rights, are actively going after property managers and landlords. Testers going after rental offices to see how agents react to the same request asked by someone who is and someone who is not a member of a protected class. Another reason these claims are on the rise is the evolving definition of disability, or what is considered a valid service dog versus an emotional support dog. These are part of the Fair Housing Act. We see a ton of these claims all the time there. Now, we've recently had one, and here's a picture from the Fair Housing and Labor Board. This is a government entity that is actually promoting you to sue your property manager if you really look at it. They told me try someplace else because someone goes in with a dog. So I did. I called HUD. Looking at this piece, this is some of the things that are against property managers right now. The Fair Housing and Labor Board is out there to protect the tenants of these houses. But on the same token, they are actually going after a property manager. You have a few bad apples, which there are, that have ruined it for all of the property managers. So they're aggressively going after different management companies, that are renting, homes for discrimination. The dogs. Another big thing for discrimination is not renting to people with children. It's just such a wide variety of items that property managers getting sued for in discrimination.
An important reason why you would need tenant discrimination, and so that there's a lot of evidence out there for that. Very good point, Dan.
Okay, now this is probably employment practices liability. If you've worked with me recently, you're on every renewal that you guys get, you're getting, I'm sending out information. Hey, let me give you a quote for EPLI. The fact of the matter is a property management company is more likely to be sued by an employee, especially a former employee, than one of their clients. Think about that for a second. Your former client is more apt, your former employee is more apt to sue you than your client. We're going back to the Fair Housing and Labor Board. They're after unfair labor practices in California there, especially California. It's all over the place, but California, it's very, very rough for that. The fact of the matter with employment practices is you do not have to do anything wrong. You just have to be accused of doing something wrong. And there's so many attorneys right now that are going after employers, property managers, and we have a huge amount of claims from that. The EPLI exposures that we have are federal laws, your FSLA and so forth. State laws, some states are going to be more apt to have more laws than others, and California is probably one that's going to be very liberal in the state laws, where a state like Texas might be a little bit more conservative there. That's more pro-business than, let's say, California. there. And the other items with employment practices liability you really want to look for is wrongful termination, sexual harassment, workplace harassment, retaliation. The list goes on. There's 100 different things that an employer can do to get pulled into a lawsuit there. So property managers there, especially if they have, more than 3 or 4 employees, really need to consider purchasing employment practices liabilities to protect themselves.
So let's talk about directors and officers liability. So this is one of the coverages that it is. And by the way, if anybody, please feel free, ask questions as we go along. Type it into the chat room and engage with us. I appreciate that. I want to make sure you're understanding, you're getting it, and definitely you can contact myself or Dan afterwards if you want to talk further about this subject, because this is a specialty for us. So directors and officers. So depending on the size of the company, depending on the type, and the size of the board of directors and the size of the company, and sometimes the dynamics of who is on the board, whether it's someone who's not employed by the company, whether it's you've got shareholders that are not part of the board. It can be dicey. So asking questions, finding out about that is an important factor. A lot of boards never think that they need this coverage, but the most important thing is whoever is on the board of directors can be personally liable, and they can be held liable and sued personally, and that really is where it gets personal, because their personal assets are exposed at that point, and that's if there's no D&O policy, they're sort of on the hook on their own, because there's no entity insurance coverage to cover a D&O type claim. So you can see that the cost of a D&O claim, the average is $310,000, and that includes defense and the damages. So that that will bankrupt a smaller company, and it's rising. 39% of private companies with 25 or more employees, they've experienced a lawsuit in the past 5 years. So that number is rising. So you're going to see more and more D&O. It's a coverage that, it's sort of like an emerging coverage like EPL was 10 years ago. And cyber is moving along as well. So you can't miss these coverages, because they're not automatically included in a BOP. And you can't get a BOP for property managers, because they just don't fit that scope for, your preferred carriers. They're usually, you have to go to outside markets, and that's why, we're here sharing this information. So who's sued? This is always a surprising one. Private companies are sued by your employees, shareholders, investors, competitors, definitely, suppliers, like vendors, customers, and lenders. So think about that. That's a pretty big bucket of people that can sue the company. So this is good evidence. You'll be able to watch this webinar again and gather this information for when you're working with. And it's not just property managers. D&O is an important coverage for all, whether they're in the technology business, whether they're an attorney, whether they're, that coverage is important for a lot of professional companies, excuse me.
Great. One last thing on D&O, when Anae mentioned that competitors sue. This is something that property managers are really, one of the most important reasons why property managers need D&O coverage is that you have a lot of turnover in the industry, which also relates to your employment practices. But when you have a property manager who has a relationship with a building owner or a community association board and stuff like that, and they go from one company to the other, and then they leave. They have a failure to compete clause in their contract, but they take that association with them. Now they're over working with you, and all of a sudden you get sued by their previous employer. That management company gets sued by their previous employer. That is something that's not going to be covered on an E&O, and depending on how the claim is written, because that is something that potentially can protect the property management company from a new employee who's over there with a new account that just went over here. There on a D. I see that claim all the time, and 90% of the management companies don't have D&O, so there's no coverage for it whatsoever. Going back to cyber liability, right now is an emerging market because management companies now are doing more online than they ever have before. A lot of them are collecting payments online, hosting the websites for their associations, the apartments, whoever their clients are. They're doing that online and stuff like that. There's cyber liability, the crime for cyber liability, the theft that's going on online, extortion. All these elements right now online are becoming really, a lot of your crimes are coming, from cyber liability. So let's look at cyber liability. We can look at it in two ways. So we can look at a third-party coverage, which we're going to discuss, and then we're going to look at the first-party coverages we'll get into in a second there. The third-party coverage is that most of your cyber liability policies are going to be claims allegations from dissemination of online or offline media material, copyright, trademark infringements, libel, slander, personal injury. There you also have your security and privacy liability, claims alleging liability resulting from a security breach or privacy breach. A management company is doing homeowners association management. They're hosting a website. There was a breach on the website there, and people's identities, credit card information was stolen, things of that nature. They're liable for that. Everybody thinks that the liability might go from the, credit card company. The liability is going to go to the management company first, and it's such an emerging crime and thing that's happened, is everything's so new that the laws really aren't there to say, well, it's your fault, your fault, your fault. So as a result, everything gets litigated. When lawyers get involved, it's going to cost you. The other thing is your first-party coverages that are on most of your cyber liability policies. You have cyber extortion, coverage for extortion expense incurred and extortion monies paid as a direct result of a credible cyber extortion threat. What does that mean? You have people, opening up email that is a phishing expedition, or there's ransomware, things of that nature that are all of a sudden attack your computer system. You're extorted for money. Your cyber liability policy can protect the property manager from that. You have breach event costs, coverage for reasonable and necessary amounts incurred as a result of a privacy breach, security, or adverse media report. So your target or your property management company has a breach. There are so many costs that are going to be associated with that breach, and this is what your cyber liability policy is there to cover those costs that the property management company is going to get from that breach. And the other thing a lot of people don't realize that a cyber liability policies now do is cover system failure. Coverage for reasonable and necessary amounts incurred to recover and replace electronic data that is compromised, damaged, lost, erased, corrupted, or stolen, including business income loss and interruption expenses due to an unplanned outage, interruption, failure, suspension, degradation of services of an insured computer system. You have a lot of these. It could go back to a cyber extortion event. They're a virus. Their property managers depend on their websites, their computer systems. They're doing so much business online. All of a sudden, your computer's down for 3 or 4 days, 5 days. You're losing monies there. Cyber liability policy can protect them from that loss. Now, going into the general liability policy here. As we know, general liability is covered for bodily injury and property damage as a result of the organization's operations. With property managers, there's two important things to consider. There's two types of general liability policies. You have an office premises only policy, designated premises only. Basically, all that policy is doing is protecting the property manager for a slip and fall at their location only. We have a comprehensive general liability policy, and that's going to extend the GL to the properties that are managed there. Also, you can have hired and non-owned auto with it. What's significant about the comprehensive GL, it's going to always be secondary because the property manager should be indemnificated from the property owner there. So this policy is always secondary, and it's very, very expensive. This policy is usually rated on the revenues there, and property managers can get pulled into some very extensive lawsuits there. So the premiums for the general liability can be very expensive in regards to that there. And the other item is your maintenance department. Some property management companies have a maintenance department. On the GL, that needs to be insured separately than the property management there. Most companies will set up an additional company for you have the property management company, and then you have your maintenance as a different LLC or something like that. By doing that is protecting the property management company from the maintenance department for any types of maintenance claims that happen.
Okay, good information, Dan. And the only thing to consider, going back to that screen just briefly, is that when you're talking about the comprehensive general liability, the premium is going to be higher because it's extending to all the location the properties managed. However, if you're talking about traditional property management, they are exposed a lot more, and so I would never feel comfortable selling someone a office premise only. It would have to be the comprehensive general liability, and typically they're orientated to that already. Good information, Dan. Thanks. So other coverages to consider. The property insurance becomes important. If you've got a really small property management company, only a few people in the office, property is always going to be important because you could have, a loss that could affect them. But the thing to consider is to make sure, that you're insuring all your BPP and separating out the computer and media coverage, and anything with a chip that's owned by the management company should be insured under computer and media, and then everything else would be considered BPP, business personal property. Fidelity is another important aspect because they're usually handling the money for their clients. Their properties managed, so they handle all the financial aspect of it. Sometimes they have check signing authority. It just really depends. So you really want to be looking at employee theft coverage and computer frauds and funds transfer, because now third parties are trying to hack into online banking, and they are doing it successfully and stealing the money out of those accounts. So consider those coverages. Umbrella is, I would always recommend umbrella limits, because in the property management business, the GL exposure, if you've got you've got someone who's paralyzed, or there's a death, or a baby involved, those kinds of losses can be huge. And the management company will sometimes get pulled into those, and so they need those higher umbrella limits to ensure that they don't have an out-of-pocket exposure. And then, of course, we have markets for workers' compensation for the management companies that, obviously they're going to have employees, but we're experts in this type of class of business so we can help you get everyone classified properly. Okay, let's see. And Dan, is that Dan?
Yes.
Is that for you?
No, actually, this was
okay,
for you, but
I'll take it. Property management, the cross-sell opportunity. This is really wonderful because this is what I talked about earlier, where this is where you get to be, you can write even more business and build your relationship with this property management company. You could have apartment owners, you can have single-family homes, you can have, and it just builds your inventory of commercial business. There's also personal lines with single-family homes, where, so if you're writing both personal and commercial, it can build both for you as well. The expiration date of the policies, you just go in and you just say, hey, let me do a review of all the coverage, the insurance coverage that you have on your properties, and I'll let you know whether there's any deficiencies. And you go in and inventory and X-date all of those, and then just as they come up, you actually provide proposals because you should be able to know the premium, you should know the coverages, and you should be able to quote it fairly easily. So that, to me, is one of the best things about property management, writing property managers. Okay.
Okay, thank you for joining us today. You can submit your property management applications today. They're located on our website at www.cidinsurance.com. You want to look under professional liability, or under applications and professional liability, then property management. There for general liability, we'll need Cord 125, 125 and 126. There. Employment practices, cyber, you can call me, give me some general information, and I can get quotes working for you on that. I'm really easy to work with there. If you have any questions whatsoever, please contact me at Daniel at CID Insurance, or you can call me directly at 619-593-2019. There, if you have any questions on the website from our webinar, just let me know. I will get the answers for you. Really important that we're going to be sending out a survey, which is going to be following this webinar. And if you could just answer that so it can help us get, what you guys need out there. So any feedback is going to be greatly appreciated there. We look forward to doing business with you. And like I said, any questions, please let me know. Thanks.
And last but not least, if you have any questions, please chat them in, and we will answer them for you. Thanks so much for joining us. Have a great day.